Well, good day all. Ira Epstein, and here we are with your Spider ETF market wrap-up. And this wrap-up is for the evening of Monday, and we are at the 15th of May 2023. Now, I want to remind everybody, I'm going to take a few days off at the end of the week and maybe even Monday, returning on Tuesday the way I'm setting things up. I'll be back on Tuesday. It's 3 business days. It's not the end of the earth. I don't take that much time off. I'll have one more vacation I know of when I go to Montana, probably July, probably July, and I do my work from there. You won't get these updates, but all my subscribers will get everything. But I am going to take 3 days and not work. Want to get away from the market, want to get back in step with it. Why? Well, events are happening fast and furious. Tomorrow at 4 p.m. Eastern, 3 o'clock Central, President Biden is due to meet now with Mr. McCarthy, and they have to make some decisions. The president is scheduled to leave, I think it's on Wednesday or Thursday, for the G7. How does he dare leave town if he doesn't either have an extension or a deal? I think a deal's out the window because Mr. McCarthy said they're very far apart on many, many issues today in the afternoon. So assuming he's telling the truth, it leaves one solution that makes sense, and that is that they go for the extension. Janet Yellen boxed in President Biden today. She said in a letter to Congress that the Treasury doesn't have the funds to go beyond June 1st. Costs went up more than they thought, and they can't do it. Therefore, the president's boxed in. If he doesn't agree and get Mr. McCarthy to agree that they should do something right now in an extension, the president then has to stay, not go to G7, and everybody has to work through this event, including Congress. Nobody goes home. Nobody goes on vacations. The president doesn't get 8 days in Asia as his vacation time, all that. Do you think that'll come to play? I don't. So I'm looking for an extension. That doesn't mean I'm right. How do you play it? That's going to be difficult too. What if this doesn't turn out that way? I mean, that's the dilemma. Do I think it won't? No, I think it will. But do you want to bet on that? Well, I'm not that kind of betting guy. You know, I went back and I started looking at ARK again to see if it's done anything of interest, and it actually has. The market seems to have found its footing in the low $34 area. I'm impressed with that. The market has come off these lows in a big way. It's not in a trend just yet. The market is up to resistance of the 200-day average, but as it came back up, it hit that, fell back to the 100-day, and it's just sitting here. Now, this is not lined up for a long-term bullish run. Why? I've not seen bullish runs happen when the 200-day is over the 100 over the 18. It's generally the flip-flop of that. But it is a rally of importance, and it says the market's trying to transition to me. The Bollinger Band, if you can clear the 200-day, is at 39.52. That's where I think the major resistance is. But you've got some pretty good resistance right here. Don't get me wrong on that. In terms of momentum, I don't think it's just going to pick up and run because it's already in overbought territory. I got what I wanted out of Schwab. I think the bottom is now, at least a tradable one, seems to be coming into play, where the market now has a lower low, higher high. But for the first time since all the way back here at the beginning of the month, the market is back over the 18-day average. The market's got a sigh of relief. The bottom pickers probably came in and said, okay, this isn't a bad company. Let's see what you do with that. In gasoline, you're still not there. The market is fighting at the 18-day average. Then you have the 200 and the 100-day averages. You're still overall in a downtrend, which is good for the Memorial Day driving season. Tesla, I think any close under 164.41 is bearish on the market. Now, they do have coming up this week, their corporate, if you will, gathering. This is really what it is. And they start talking about what they're going to do. Mr. Musk lets everything go. Where are they? What models are going to happen? What's going on? We'll see what that brings to the marketplace. In the financials, I'm still not thinking this problem is necessarily over, although, in all fairness, what I see in Schwab has me thinking, well, that's not completely true. All right. Schwab certainly should not be with all those other bank issues, but the way that it's got its business set up, what it has to pay out in interest rates hurts the bottom line now. No question in my mind about that, but it's not as bad as it could have been, and I think that the worst, as I said, is behind it. As I look at the market, this particular index still very much in the bear camp. You really got to close over 32.47, the 18-day average, to tell me that this market's out of the woods temporarily. And in XLI, you still have some resistance up here at 99.31, but I don't like what I see. I see a higher high and a lower low, not really a trend on that market. SOX today absolutely came out back to life. The moment it cleared 416.66, you could not even think of being short this market any longer. And I was thinking of being short this market. The key was at 411.88, not to let it get over that, about $3.80, $4 higher. And bingo, once it did that, you don't want to be short the market anymore. I also don't think it's going to run now. I think that it caught the shorts, knocked them out. It goes to the Bollinger Band telling you, okay, I'm going to respect that 100-day average, and that's the end of trying to be short me. In the home builders, you can see that you're just hanging here as an overbought condition that is refusing to embed. Embed occurs like this, when both numbers get over, the red and the blue get over 80, and it's often accompanied by a rally here. You're refusing to do that. You're just staying overbought. Overbought markets either embed or they turn down. Any close under 70.25 would be bearish in this market. What could set that market in trouble? Well, certainly not solving the debt ceiling is one of the issues, pretty much in front of you. In the energy sector, the Biden administration, Ms. Grinholm, I think is her name, said today they are now about to take tenders for oil. They want to buy oil now for August delivery in Texas. Okay, we'll see if they accept what people offer. Remember, they want to buy it at a certain price. Before it was $72 down to $67. You're sitting here about $71 right now. They may buy nothing if the market moves up on them as these tenders come in. So you've got to wait and see what's going to happen here. But they are willing to accept now offers to them for 3 million barrels of oil. We will see. As you know, I have zero faith in these people. In any case, you're still very much in the bear trend. You're out of it if the red line closes over 21. Hasn't done that at this point. In the gold market, you have a market that has had a correction to the downside. It keeps holding the line in the sand, that 18-day average of closes. It needs a different pattern than this to get me excited. While it has higher lows, that's why I have the arrows pointing up, you also have lower highs. So you have a market that's narrowing in like that right now. Probably watching to see how the debt ceiling issue goes. In the silver market, you literally fell out of bed. You're oversold as can be. You had 2 days under the Bollinger Band on Thursday and Friday. You popped back to the right-hand side. It's not a bullish signal, it's just a sign that you don't want to stay oversold. In the copper market, higher highs, lower lows, oversold market. We're waiting on more Chinese data to see what they do, but the Chinese did not change their interest rate policy today. I'm noticing freight shipments via air down about 18%. That's not a bullish sign, so we'll see what goes on here. It is the first move under the 100-day average in a while. Markets often come back to test that. When we step over to BND, well, how do you play this or TLT as you go into this meeting tomorrow afternoon? You know, you don't know who's going to play hardball. You don't know if the two sides want to say, yeah, let's do an extension and get something done. I don't know. I lean to the extension in a heavy manner. That doesn't mean I'd bet a penny on it. In the dollar index, if they do the extension, the safe haven buying should come out of the dollar lickety split. And before you know it, you could be trading between the 18-day average and here. Don't have a deal extension. And why can't the dollar rally up even more? Because everybody around the world is going to get scared as can be. The U.S. isn't paying its debts. They're not to be trusted. What's with the reserve currency? Blah, blah, blah. You can only imagine the fallout. It would be severe. Which is the flip-flop on the euro, because as it's come down, this should get the bid, and I wouldn't be surprised to see it back to the 18-day average on news of a continuance, an extension on the negotiation. So I put it together, try to come up with ideas. And I can tell you, that's where I put them out in the morning in my SPDR ETF. It's in this ETF that I'm able to take off the chains and I can say, buy here, sell there. I'm going to be wrong. I promise you, you're going to have bad trades. I promise you, you're going to have good trades. They're going to come out in different manners. The key is the money management. The key is trying to catch the trend and stay with it. The key is getting the chart picture. Not what I think. That's unimportant. It's all about the chart pictures. We're going to cover 40 charts in that list. It's going to vary all the time. I'm forever changing the different patterns in it, where the market's getting excited, what we should be looking at. The charts will look like these, very much like these. As we're putting all the studies on, I'll revert back and forth from daily to weekly charts, trying to give you both the idea of what's coming out in fundamentals, where the charts are. How do you get this? Go to our website under the word research. It's there, SPDR Research, or you can just click up here and it'll show right up. If you click that icon, it'll appear, take you right where you have to be. I'm Ira Epstein. I'll see you tomorrow. Have a good day.